Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. Overall, prices here had in the past tracked sideways until about 14 weeks ago. In mid-February, we saw the market break higher, not only as far as the June 2021 high, but only as far as the June 2021 high at 18,610 and just under the then long-moving average, currently 18,015, before a move back down. Our prices then started to find a base again at the May 2021 high at 16,610 and around the combination at the time of the short, medium and medium moving averages, currently 18,620 and 17,705 respectively. It was back then that I started contemplating what sort of pattern the market was creating. Now my initial thoughts were that this might be some sort of rounded bottom, which actually turned out to be true, but limited in its aspect. I next considered whether the action actually from the highs seen back in August last year might make this a possible descending scallop pattern. And I held on to this idea for a long time. But the longer I held on to it, the greater the holes I saw in the argument. And this led me to consider the descending scallop pattern morphing to become another pattern, a possible bump and run reversal pattern. 3 weeks ago, I lodged this idea in both your and my own mind, and I'll seek to develop it when I can. But I should warn you that a primary topside target would be in the region of 31,200, well up off the top of my daily chart. So something to bear in mind, stick in a diary if you will, for some date in the future, but also to look closer at more nearby and I suppose realistic levels first. This leads me to the elephant in the room, the early February to late March bullish Andrews pitchfork, highlighted in dark blue on my daily chart. This has so far been good at showing the bullish angle of attack of the market. However, late 2 weeks ago, and then again early last week, the market breached the upper time, currently at 21,430. Now, I commented on this last week thus, and I quote, "Now, this leaves us with three options. Firstly, will the market repair the breach and drop back within the bullish Andrews? At the moment, this looks unlikely. Secondly, will prices track along the top of the broken upper time, or have I sometimes, as I have seen done, on broken pitchforks? Right now, that is a possibility. Thirdly, will we have a new, more acute bullish Andrews pitchfork for the April-based action, which I have lightly outlined on my daily chart?" I carried on. I'm not so sure on the negative side. The market has trampled all over the lower time, currently at 28.90, when it was first created. And that's the end of the quote. Well, since then we've seen the market try and run along the top side of the dark blue upper time, but then midweek last week turned back down, seemingly capped by the May 2014 high at 21,610 and dropped down to the dark blue highlighted middle time, currently at 21,20, where along with the September 2022 low down at 20,045, the market was supported and has tried to move higher since. All that action has made the new April-based bullish Andrews pitchfork redundant, and I will retire it after this commentary. I suspect the market's considering whether or not to rise up and tackle again the May 2014 high at 21,610. The February 2014 high also at 22,155, the August 2023 high at 22,700, and then the June 2023 high at 23,400. LME 3-month zinc. In early April, when the market's break upwards was finally sustained, it came not without incident. Prices hesitated over middle to late April in a specific fashion with narrowing ranges that led me to draw in dark blue a small pennant pattern, peaking at the end of April. We saw a breakout on the upside from this pennant and the market reached higher. However, the initial move up somewhat lacked enthusiasm, which also prompted me 3 weeks ago to draw a pair of trend lines in purple, and they're currently at 30.23 to 31.03. For what I suggested back then might be an ascending wedge pattern, not an expanding one, an ascending wedge pattern that had developed and formed out of the pennant pattern. Now this proved to be accurate as prices moved up within this ascending wedge pattern until last week, when we saw prices punch up and out of the pattern, as well as take on the bright red coloured neckline currently at 31.49 of the September to December 2022 reverse head and shoulders pattern. This move higher not only achieved target X at 30.40, but also the hardest reached secondary target X1 up at 31.65 for the pennant pattern, but found it tough pushing through the bright red neckline, having only penetrated and not closing over it. Indeed, the first 3 days of last week made a 3-day bearish evening star pattern. We saw a limited though bearish move lower last Thursday, though the action ended up as an indecisive spinning top of all things, which was still within the purple highlighted ascending wedge pattern. Thus, last week's move up was, after all, a false break higher. However, prices still are trying higher, testing the upper purple highlighted trend line today and getting closer each day to the bright red upside, or neckline I should say. So it's perhaps time to consider what may lie ahead on the upside above that neckline. Thus, beyond the bright red neckline, we have congestion at 3200, then the June 2018 high at 3220, the April 2018 high at 3302, and then the 50% Fibonacci line of the March 2020 March 2022 move at 3329. Now, helping in this case could be the potential topside for any break above the ascending wedge pattern. Thus, based on the false break, so I've not updated it as yet, but based on the false break, I laid out a primary target X2 in the 32.94 area and a secondary hard to reach target X3 up in the 24.27 area. And that's up beyond the top of my daily chart. For the moment, in anticipation of a break higher, and I am anticipating potentially that, I will keep those targets above, but I imagine that I might tweak and finesse them at some later stage, so it wouldn't be by much. LME 3-month tin. There were, in the recent past, multiple major patterns acting on this daily chart. This year's actions saw the market push back up from the stratified congestion bands below over all the moving averages and start the discussion about a just barely possible pattern here, a mid-October 2023 to late January 2024 inverted head and shoulders pattern. All the targets topside for this pattern have been reached. This led me and brings us to another pattern, and one related to this reverse head and shoulders, and that is a mid-October 2023 to very early April 2024 ascending wedge pattern. This ascending wedge pattern gave some additional targets above, and all were also reached, leading into the next pattern. Now, I said many weeks ago, and I quote, "You see, it seems the ascending triangle pattern has morphed into another pattern, this time into a bull channel, a late December to date bull channel," end of quote. I said 13 weeks ago, and I quote, "Of all the patterns, I think this is the one to pay close attention to, as it is still fairly young compared to the others, but is also the most potent," end of quote. 7 weeks ago, prices punched up and out of this ascending wedge pattern that had morphed into a bull channel and reached all the topside targets for this pattern as well. So where has that left us? Well, the break higher had been filled with hesitations, and these have helped create 3 patterns formed over April. A bull flag in the first half of April that reached its initial topside target, then a spike upwards in the middle of the month, followed by a possible hesitation in the second half of April that looked very much like a bear flag. It was a slim bear flag, but it had potential down to a target in the 30,000 even zone. but it failed to fulfill that potential. This was not all, as together these two congestions plus the central spike altogether made up a very, very narrow head and shoulders pattern, head and shoulders top pattern, with a fairly flat neckline formed over April, and that's currently at 31,490. The potential for such a pattern was down in the 29,045 zone, and this pattern also failed, not fulfilling its potential on the downside. And as I said 3 weeks ago, and I quote, "It looks like the slim head and shoulders pattern formed over April is not a topping action, but possibly a continuation pattern, and maybe even be morphing into something else," end of quote. Well, that was what happened with prices bouncing up off the July 2023 high at 32.05 and reaching up at the start of last week to just over the 50% Fibonacci line of the March to October 2022 move at 34,175. This action prompted me to draw last week a pretty good looking bullish Andrews pitchfork with the market in between the lower time below and the middle time above. I said as much last week, and I quote, "Right now this looks like a pretty good pitchfork in showing the bullish angle of attack," end of quote. Alas, this was not to be, as the bullish angle of attack of this Andrews pitchfork was too steep. And the action exited out of the lower time despite maintaining a strong bullish incentive. So this week I finessed the bullish Andrews pitchfork into a bullish shift pitchfork, which you can see highlighted in dark blue on my daily chart, which is a much better fit for the market, and the shallower bullish angle fits in well with the market action despite over the last 2 weeks when the overhead middle time was tested, and that's currently at 35,530, but held strong on a closing basis. Thus the market is at the moment in between the middle time overhead and the lower time below, currently at 32,205. Now this brings me to my final point, one I discussed at length last week. These recent bull and bear flags and slimline head and shoulders continuation pattern, could they possibly be a start of a very large mid-March to date bullish halfway hesitation? Now it certainly seems possible, though we are only just in the early stages of forming the second leg of such a pattern. If this was to develop, then we could have a potential target X for such a pattern up in the 38,500 area, and that would be very interesting. The alternative is that we have a type of diamond top pattern, which seems unlikely, though I would not shut the door on a diamond continuation type pattern at this time.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.